What could the Brexit vote mean for your investments?
Well, the referendum is a very, very big deal, and it's overhanging every market at the moment, not just the UK, but the European market, obviously, but also US, Japan, and elsewhere. All eyes are on the UK for this vote. It's possibly the sort of it is the biggest thing to affect the EU, certainly for many years. I mean, when we had all the sort of the crisis in Greece and Portugal and Spain and Ireland, this is. It's a different type of deal because, of course, those crises sort of evolved over time. This is a very sort of a binary thing. We're either in or we're out, and we'll know on the 24th of June. But what it means, there's one thing that's for sure, and that's sort of like the big market that's probably going to move on the Brexit either way is going to be sterling. And how it moves in relation to other currencies. Now, I mean, there's an awful lot of discussion over there about what sterling might do. The sort of feeling seems to be that it could move by as much, it could fall by as much as 20% initially if we vote to leave. So that's the big thing at the moment. As far as sort of stocks are concerned, it's going to be it's going to be a complicated, and it's not going to be binary at all. It's going to be very mixed. Because there are going to be if sterling does fall, let's assume everyone is right and it does fall, and it not only falls but stays down for some time. It may do. I really don't know. Then there are going to be companies, multinational companies, that are going to benefit from the weaker pound. And it's also, a weaker pound is inflationary. So that has a knock-on effect. And bear in mind, the Bank of England and everybody else is desperate at the moment to create inflation because they want to pay down debt. And, well, they don't want to pay down. They'd rather that debt was inflated away. So, there's an awful lot at play here. But it seems possible. I mean, the companies that are going to get hit hard and will be marked down hard initially if we vote to leave will be those European-facing businesses, whether they're being exporters, but also financial services, I think, because the outlook, what will happen to our financial services industry, especially sort of ones who have banks and financial institutions, a big presence in the EU. What's going to happen next? But it'll evolve over time. It's not going. There will be an initial market movement, but I mean, we're years away from actually deciding how we're going to sort it out if we vote to leave.
And what are the big risks, the warnings?
Well, in terms of warnings, it's a binary decision. It's going to one way or the other. The lovely thing about it is that we can completely ignore the politicians. We're not voting for one MP over another. We've all got the same vote. It all means the same, and it's either in or out. We're having markets are moving around a lot on the back of individual poll numbers at the moment, and we saw. The Leaver, basically, I mean, Remain were sort of in the lead at the beginning part of the year. We saw Leave have a real spike up when Boris Johnson declared that he was going to be in the Leave camp. And recently, we've seen the Leave polls for the Leave sort of show that a small lead for Leave, and the effect of that has been to see for sterling to come off, but FTSE's been unaffected. It's really just been down to sterling. I don't really think we've had much of too much movement in the gilt market even. But in terms of sort of warnings, I suppose what's that saying is that sterling is going to be the big mover on the back of the result. Okay, a vote to stay is just a vote for the status quo. So it takes uncertainty out of the picture. So if we can calculate that actually sterling has, I think sterling started to move on fears of what might happen at the referendum back in early December when it broke through 150, 149. So if you remove all that, then sterling's back up to 150, 149, 150. That's 5%. Add a bit more on for that. That take us up to 155, 160. I don't know. That might be a knee-jerk reaction. I doubt if it will hold up there. I doubt if it'll hold up there. But then, if I think we vote to leave, I don't think sterling, if it did lose 10, 20%, it would be down for very long either.
What kind of stocks could suffer?
Well, the stocks that will suffer will be those who have an export market primarily in the EU. Those are exporting to the EU. Those will be the first stocks to get hit. I also think that the banking sector will get hit hard, and financial services in general. These are the areas that are going to sort of suffer the initial markdown and selling. Again, it's a long, protracted process. If you vote to stay, you vote for the status quo. That's it. End of. So some of those stocks that have had seen selling ahead of the event because people are worried about that. They'll have a nice little bounce and then settle down. If we vote to leave, it is a long process. So I think we will see an initial sell-off. I'm not saying there'll be an immediate bounce back because I don't think there will be, but I think things will settle down maybe at lower levels until we actually really understand what leaving entails.
And what will the impact be on your portfolio?
My portfolio, I don't know because I'm mostly long of gold and generally have a short, I'm probably net short stocks, but only just. So, I mean, gold might rise because of the uncertainty if we vote to leave. Gold might come off if we vote to stay in. I don't actually imagine too much happening to gold and silver, to precious metals. I guess stock markets will come off if we vote to leave and maybe go up a bit if we vote to stay. But ultimately, from my portfolio's perspective, I'm looking at sort of the global environment and what we can expect over the coming years, or certainly the rest of the year. And that really is, for all the recent talk, I don't see the Fed rushing to raise rates, certainly not over the summer. And then I think they might be hard pushed to do anything for the rest of this year.
Doomsday. Will everyone sell? Will companies pack up and leave?
No, I don't think so. I think that the noise that we've been hearing from companies, a lot of the noise we've been hearing is from big multinationals who've sort of made an awful lot of threats and this about how that they won't be able to operate in London or in the UK or whatever. They'll have to move. I'd be very surprised if they did pack up and leave. For a start, they're going to wait and see what unfolds because we don't know what kind of deal we will have with the EU if we do vote to leave. We just don't know. We haven't decided on that. We haven't discussed anything. There's all this talk about Norwegian models or this model or that model. Well, we haven't decided on a model or whether we're going to sort of draw up something completely unique. So I think they'll stay. There might be the odd one who it doesn't really matter where they operate out of anyway, who might decide to go. But I think there's been a lot of fluff and bluster. And then I think if we did vote to leave, we'll be calling a lot of companies bluffs. And I think that goes the same for a lot of the big organisations who have been saying how disastrous a Brexit would be. We'll wait and see. I mean, I think the sort of like the fear campaign really has been overdone.
What will happen to the sterling?
I think sterling will. I think the reports that I've read have all said that sterling will sell off quite hard, and we're talking anything between 10 and 20%. I don't know, but that seems sort of kind of. I can see why that would happen. I can see why that sort of sterling could certainly lose ground, but I'm not convinced that it will be down for long. I think sort of things will play out as they play out. Sterling will find a new level and will trade on from there. I mean, if we look at cable, so we look at sterling against the dollar, it has dipped over the past 20 years. It's dipped below It's dipped below 140 on about 5 occasions, I think, 4 or 5 occasions. And if we take away what happened this year when it stayed down below 140, it was trading in the 139 region for about a week, in all the other occasions it snapped back pretty quickly. Now, whether the fact that it's traded below 139 for a week earlier this year on Brexit fears means that it could sort of break below that, and we could see it establish at a lower level for some time to come, or whether the fact that it has continually snapped back quite quickly means that we'll see it dip and then snap back above 140. I don't know, but time will tell. But I mean, I wouldn't wave goodbye to the pound yet and think that it's on the floor for any length of time. I think it'll bounce back.